Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 14th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And there was a bit of a pushback in Australasia and Asia Pacific generally. The Australian dollar and the New Zealand dollar both on the front foot again yesterday against their US rival, and both adding more than 0.4% against the US dollar in the session. The Chinese yuan also made gains against the US dollar, adding 0.16% against the US currency, and those continuing moves there in Australasia, backed up by good data, which we'll come to momentarily. The Brazilian real was on the back foot once more against the US dollar, down by 1.2% against the US currency. Dollar index for its part trading at 97.07 shortly before we recorded the video, down by around 0.07% on the day, but still hanging on to that 97 handle. Okay, what's on the calendar then? Events that may move the markets today. Well, we already had some data out of Asia Pacific. As I hinted, we've had consumer inflation expectations for February out of Australia, and they were better than expected, or certainly better than the prior read. But perhaps more importantly, we've had balance of trade, imports and exports data out of China for the month of January, and again we'll come to look at those numbers a little bit later on in the video. To come this morning then at 7 a.m. GMT, we will have gross domestic product for Q4 out of Germany. And then at 9:30 we'll have a speech by the first of the day central banker speech as well by the Bank of England's Villiger. At 10 o'clock then, having had the German data 3 hours before, we shall have gross domestic product data for the whole of the Eurozone, again for Q4 2018. And then we pause and cross over the Atlantic at 13:30 for retail sales data out of the USA for the month of December, and that'll be accompanied by producer price index data for January out of the States, as well as continuing and initial weekly job claims from the USA. And then we take an extended break until 20:30 this evening, when we get a speech from the Reserve Bank of Australia's Governor Kent. And at 21:30 tonight we'll have business PMI data out of New Zealand for January, and at 23:50, if you're still in the market, foreign investment in Japanese stocks for the week of February the 8th will be released. Okay then, breaking news and comment that's caught my eye overnight. And first of all, Chinese exports rebounded strongly in January, rising by 9.1% month over month and 13.9% year over year, and this despite tariffs and ongoing trade tensions. Well, the question is this a one-off, or is it the start of a rebound in the wider economy? And I think that's what traders in the market as a whole will be thinking about over the coming days. But there was more good news, or better news I should say, in Asia Pacific as well. The Japanese economy grew by 0.3% in the fourth quarter of 2018. Not brilliant, because it was below expectations in the market of growth of 0.4%, but certainly better than the contraction of minus 0.7% we saw in Q3. So little victories there for the Japanese economy, but it is back on a growth trajectory, if a very slim one at the moment. Turning to politics then, UK MPs are due to debate the next steps in the Brexit process today, whilst the US Congress will vote on a bill for partial funding of President Trump's border plans to try and avert another US government shutdown. The proposal is to grant the President some $1.4 billion out of the $5.7 billion he's requested to build his controversial border wall. Okay then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? As we've seen, the US economy and labour markets are booming, yet prosperity is not perhaps as widespread in the USA as we might have thought. New York Fed data shows a record number of people have fallen behind on auto loans, and there were 7 million delinquencies as of the end of 2018. And here's the charts which captures the number of auto delinquencies all the way back to Q1 1999. This is the highest figure that the New York Fed has ever recorded since it started keeping these records. And slightly worrying really for both the US car industry and the Fed, that in a booming economy this many people can fall into trouble economically. Okay then, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representatives, who will be very happy to take you through those risks. And do as I say, please read this risk warning thoroughly. Thank you very much for your time.